In this video, I'll share with you a concept called narrating the market. And it's something that I believe if you don't do, you should at least try to find a way to do inside your head, because it is a really good way to understand what's happening in the market. It gives you a clear perspective, and I'll share basically how you go through that and how you do that. So first up, let me start with an analogy why I think this is a really powerful thing to employ in your trading. And if you've watched sports, you know that there's sports commentators, and there's typically two commentators. There's a play-by-play commentator, which is basically the person that is actually doing the play-by-play, and then there is an analysis or color commentator, and that one is giving expert analysis, background information, statistics, maybe even telling jokes here and there. Now, hopefully when you trade, you have a better look on your face than these guys. But if you watch sports, you know that there is commentators beyond just the noise of the team, the crowd. It's not just silence and the actual sport. There's commentators. And the reason for that is obviously entertainment value. But it's also because when you're watching a sport, you can, the human mind has the ability to drift. And without that commentary to capture your attention, without that commentary to keep you interested and to add that additional layer, watching a sport, if you've ever done this, just turn off the sound and watch a sport. It's different than actually seeing the commentators. You're not as engaged. You might glance here and there, but you're not as engaged as you are when there's actual commentators are. Now, obviously, there's times where you don't like the commentators or anything else like that, but you're just simply not as engaged. So if we go back here to the market, and what you're seeing here in the chart, we're looking at ZRX BTC on 1 hour time frame Binance, and you're actually seeing these arrows here are from the latest video that I did for the training called Measured Moves. Very effective strategy in conjunction with value channels. We're seeing potentially that this measured move here might actually play out here on ZRX. I know on AST and a couple other ones they have played out. And that actually is what got me thinking about something that I did used to do a lot more than I do now, which is narrating the market. And it's exactly what you think it is. It's basically, and this is going to sound weird, but especially if you're home and you have a significant other, you have kids or a dog, but basically you're narrating the market out loud. And this concept really comes from the more that you can engage your mind and your senses into your trading, the more that you can focus, the more that you're going to absorb the market and what the market is telling you, and the better trades you'll do. It's something I learned is that when you're distracted at all, you're not going to do your best trades. But when you can find a way to get in the zone and focus, you're going to do really good trades, especially if you're trading a system. Then it just really comes down to going through the process. And the narrating the market concept that I'll share with you here, I think is one of those ways. And after a while, just like anything else, a lot of times, and I'll mention this, I'll do a trade in Discord, and I'll share it in Discord. And someone will say, well, what do you see there? Why'd you do that trade? And a lot of times I'll just pull up a chart and I'll see a setup I like immediately. And I can just glance at it really quick and say, okay, that makes sense. Do a little bit of TA and then say, yeah, that's a good setup. I see that. But all of that came from me spending a lot of time with charts, trading, and actually going through this process of narrating the market. And it's really simply, and if I jump into it, narrating the market really comes down to, first, whatever type of trading you're doing. So let's say I want to swing trade ZRX here. We're looking at it on the 4 hour time frame. And what I would do is I would really say out loud, I would narrate the moves that the market has made as I'm doing the technical analysis. So you see there's already value channels on here. There's these arrows here that are the measured moves. And I guess I could remove these. I wanted to kind of keep them on because I was going to do an additional video. But what I would typically do is I would do something along the lines of, at this point in here, mid-July, I would say, the the sellers have maintained control of the market. And the sellers drove down the market, and there was a few times here and there where the buyers tried to step up, but they just could never actually get control of the market. It was rejected to the upside every single time. And usually what I would say too is that the buyers over the course of, I would say, let's say 10 days, pushed through 1 value channel, 2 value channels, 3 value channels, and stopped in the middle of the 3rd value channel. They actually pushed through 4 if you look at this. So push through 4 value channels. From there, the buyers stepped up, and the buyers actually pushed the price above through 1 value channel and to the midpoint of the next value channel. From there, these sellers maintained control or regained control of the market, so they continued to have control of the market. So this is definitely a bearish market, and they drove the price down through 2.5 value channels. Here, the sellers or the buyers stepped up, and the buyers stepped up and actually did a small measured move up and created a structure here that was heavily rejected by the sellers. And it's been rejected pretty much. This whole rejection right here drove this whole move. So this rejection, this structure here, this last try of the buyers was rejected all the way down to here. Now what I would do, and this is where, like I said, this is my own technical analysis. This is my own trade strategy. This is how I look at the market. This is how I trade the market. So I see these things already. I don't draw this stuff anymore. But if you don't see these things, and this doesn't, if you don't see the things, draw on the chart. I've said this in another video. The trading is an 80-20. 80% of the time you're doing technical or fundamental analysis, 20% of the time you're trading. So if it's backwards, if you're trading 80% of the time and doing 20% technical analysis, stop immediately and start doing more technical analysis, because that is the technical analysis is your practice. And then the trading is the game. And you always practice more than typically you play your game. So what I would do here is I would say this is an area of structure. See, once again, I see this in my head, so I don't draw a lot of these things because I can look at this and say, yeah, that's definite structure. There's a lot of capital trapped in this range. I just know there's a lot of capital trapped in this range. So as I look and say, well, this movement here, this was a panic sell that drove this whole movement down. Once again, this is my theory of the market. So move this whole movement down. Now, as we go here and we look at what's happening, we see that it hit another point of structure, and then the buyers tried to maintain control. There's a lot of opportunities for swing trades here in this chart, a lot of opportunities. And that's what I showed in the last video, which is basically measured moves of how many swing opportunities there were on this whole move down. But as we get to the bottom here, if I were to advance this, I think you get basically narrating the market. You're basically narrating every major move, and you're narrating what happens. And the best way to look at this is in the context of buyers and sellers, which is basically saying that the buyers did this or the sellers did this. And I should mention, in my haste to talk about how to narrate the market, I did not mention a couple things that you would add into this, which is volume. So in conjunction with all this stuff, I would be saying on heavy volume. So look at this move here, this where there was panic selling right here. This was on heavy volume. So in this move down here, this panic sell to the market that pretty much destroyed the value of ZRX right here, this destroyed the value at ZRX and drove it down to here. Now, I think it will eventually get back up to this point, but this would be my target exit point for a longer swing, somewhere in that range, maybe even below this value channel here. But as I was narrating the market, I would say the sellers got panicked, and on heavy volume, pretty much the heaviest volume in recent memory, all the way for at least a month of sell volume on heavy volume, drove the market down. And then there was a reaction by buyers, but that was rejected all the way down to the downside. So as you're narrating about this, basically the concept of narrating the market is, you would be doing this anyways. You're looking at the market and you're trying to understand what have the moves been. Where is there support? Where is there resistance? Where is there an opportunity? Does this make sense? Where would I put my stop loss? Everything else. So as you get to the current price, where we're at right now, you'd have a full narrated history of how it got there. And sometimes I would do this on the same chart day after day. If I'm looking to trade the same thing day after day, even though I've been looking at that chart, I do this a lot in the Forex market. I'll go back and I'll just look at the chart, the same chart, even though maybe I've been trading the same thing. I'll just go back and look at the chart from multiple time frames just to get a better understanding of where we're at. Maybe I see something different. And it's the same thing here. And this is where, as you get down to the current price action, you would say, well, the sellers once again maintain control of the market. And now it looks like the buyers are actually have got control of the market and are maintaining some point of actual value that potentially might be creating another structure area. This might be another structure area. And that's important because this structure area will count as support. This whole area here will count as a level of price support that has the potential to then move the price to probably the next level, which the next level of structure is around this area here. That's the next level. So really, as I'm drawing on the chart, as I'm narrating the market, I'm looking at this and I'm saying, well, if I enter a trade here, where would my stop be? Ideally, my stop would be here, because if this whole structure breaks down and this inflection point, so I'm bringing in a lot of things from my training and from other videos. This inflection point, if this structure breaks down, this little structure, and this inflection point breaks down, I want to be out of that trade. Now, it might maintain support, so maybe I would want to be here a little bit more. So I'd want to be down here a little bit more, give it a little bit of room below the 75% mark of this. And notice how I'm naturally doing this when I'm recording videos. So when I'm recording videos, I'm naturally narrating it. But I'd ask you, do you do this? Do you just look at it and say, oh, well, this is, do you even say it out loud? Do you even think it in your head? You should be thinking these things. You shouldn't just be putting these on. You should be really having an argument with yourself. And you should be, because trading is a solo activity. Typically you're alone, and you can get into tunnel vision. That's where I think this narrating the market helps you get out of that tunnel vision a little bit. Because what I'd say is, well, okay, I'd want to put my stop loss there, which is 15% down below. And then my opportunity for exit is below this structure area, below this value channel area, which puts my R&R, risk reward ratio, to 1.97. That's my first target. Now, if it breaks through that and then it creates a level of structured support here, then my next target is the next structure area. I don't know why it keeps doing that. Is my next structure area either below this value channel or below this structure? I'd probably do below this value channel, because here's what's going to happen. And I'm just narrating basically what I would say. Basically, that's a risk reward of 3.87. What will happen when price gets to this level is that there's a lot of traders that have been trapped in this trade and that is trapped in this range going back. If we go back here, there's traders here too, but there's a lot of capital trapped in this range going back all the way to mid-July. So as price gets to this level, these traders are going to make a lot of decisions, and most are looking, when price starts getting up here, they're not going to take a small loss. Most traders are going to wait for it to hit their target or hit where they entered, and then get out at break even or get out a little bit above, or some of them won't get out and then just ride it back down. But there'll be a lot of sell pressure in this area. Now, the other thing that I would suggest here with narrating the market is I'll keep the chart like this. So I will keep the chart like I just did here. Now, this looks like a pretty good trade opportunity for me. And in the crypto market, what you actually want to do is you want to bring in what's happening with Bitcoin as well. And this blue line that you see here on the chart is Bitcoin. So you can look at this and just say, well, Bitcoin dropped here and then it dropped here. And that really coincides with all of these drops. So my concern with the market right now is that Bitcoin, and let's just go to a Bitcoin chart. Bitcoin, we go to the daily and we open this up. It's this 6,000 range. And if you're watching this, I'm doing this because if you're watching this at a later date, maybe a year from now, just so you understand the context of why I'm very skittish about a lot of trades, just because this 6,000 range has been tested a lot. And the more that support is tested doesn't mean the stronger it is. Typically, the more that support is tested, when it breaks, it's going to break hard. So right now, there is not a definitive bull side to Bitcoin. There's sentiment overall that there's bullish long term, but in the near term, there's sentiment neither way. So this could easily break down from where it's at right here. We're looking at the daily chart. I'm looking for a move up here above 6.6 and then basically to find a range above here. That would be a bullish sign. And then a trade on ZRX at this range would be a good trade. So I might scale into this position right now, but I'm going to be very skittish if Bitcoin moves down a lot, and I might actually put my stop loss a little bit, if I could grab the right area, a little bit higher, just because if I'm wrong, I can always re-enter. Or I might be watching Bitcoin really closely. That's basically, I'm not. I'm watching Bitcoin very closely here for a lot of my alt positions, because basically this looks like a really good setup. This value has maintained, this inflection point has maintained. It looks like an opportunity for a longer term swing. But I would prefer to enter, instead of entering here, I'd prefer to maybe enter down here, which is a difference of, let's say 12% or so, 10 to 12%, and enter at a larger position than enter up here because of where Bitcoin is at. Once again, I'm narrating, right? I'm narrating the market. I'm narrating what I'm doing. I'm narrating the trading that I'm doing. I'm going through it. So for me, I'm doing YouTube videos, I'm doing training videos, and I'm kind of naturally narrating things anyways. But this concept of narrating the market, if you're not doing this in your head, do it out loud. And even if you are doing it in your head, try doing it out loud, because you might find that you digest the market, you look at the market, you understand the market, and you have a new understanding of price action when you do this out loud. What I would suggest too is that I forgot a few things in here. I forgot volume and I forgot Bitcoin. So you should have something maybe written down that basically gives you a process of how you narrate the market, which would be, first, I start with price action and I start with buyers and sellers. So I have my value channels on here. The other thing I didn't mention in here as well, which I find extremely helpful, and I do this a lot in the Forex market, for instance, is moving averages, because moving averages tell you the bias. So you'll notice I don't have any other indicators on here. I just have moving averages. So the other thing that you would do in conjunction with this, and of course you can do this with multiple time frames. So if we go back here to the 1 hour, so I'm on the 1 hour, is you'll see I have moving averages on here. So for instance, this purple line is the 21-day moving average. This one here, as I make it go away, that's the 99. So that's the 99 EMA. So the other thing that you would add to this in conjunction is create a list. So create a list where basically you say, I look at price action from a buyer's and seller's perspective. I look at volume, so I bring in volume. I look at moving averages. I look at value channels, and I look at Bitcoin. So you bring all that in. So you're not just guessing your narration. You have your narration down. You have what you're narrating down. So basically you start with price action, which is priced at maybe you say date too, a date. And then maybe you add some moves to it, which is basically on a fierce move from 6 September to all the way 12 September on the 1 hour time frame. There's a huge move down with basically above average volume on a lot of these moves. So above average volume on a lot of these key moves. And it moved from the 99 EMA all the way down to a value channel. It moved through 1, 2, 3, 2.5 value channels and found support at this value channel. At the same point in time, Bitcoin declined, moved up, was pretty volatile. Well, that's kind of normal, right, with Bitcoin. But it moved down, but it was on a definite bearish track at the same move down here. From there, when it found support at that value channel, it moved up. It found some resistance at half the value channel, so basically the midpoint of the sub-channel. So this is a sub-channel. That's where you'd expect. You'd notice how this really aligns really well, this area here, between bouncing between the sub-channels of the 50% and the 25%. So I use value channels. So it found rejection, but it ultimately, the buyers maintained control, and it bounced off the 99 EMA. Played around with the 99 EMA, moved above it, move above it. One of the actual moves was a huge move in volume that was rejected. And then from there, it traded below the actual 99 EMA, and now it's riding the 99 EMA. So one of the things I'd be looking for is, and this is in conjunction, it's created structure here. We're at this range here. And the other thing that I'd be looking at as well is that the 99 moved beyond this value channel here and is at the middle of this value channel. For some reason, I don't have the 200, so I'll turn that on. I'll turn on the 30 and I'll turn on the 50. So we'll see that all the moving averages are starting to condense. So the fast and slow moving averages, and we might start seeing, and this would be a good sign, especially if Bitcoin holds up, is that this structure maintains, this inflection point maintains, including this one as well. And then these faster moving averages actually cross over some of the slower moving averages. We see that the 200, it's on the 1 hour here, it's riding the actual 299. So they're starting to condense. So there's most likely some type of move here on ZRX, an opportunity based on just looking at just the moving averages and the bias I would get from it. Of course, I'd be looking at the daily as well. So the 1 hour, right now, there's definitely still a bear bias on the moving averages because it's trading below all moving averages, although it's starting to bounce above the 4. So this would be an early sign potentially that it actually might pick up here. But once again, a lot of this is dependent on Bitcoin. And the point of this is that you're narrating this. You're of course, if you're not saying it out loud and you're looking at the chart, you're already thinking this, but there should be a process that you're going through to actually digest this information and not just stare at the chart, not just look at the chart. And one of the other things that I find that this helps with a lot too is that oftentimes you get tunnel vision on one or two different things. You're just looking at price, you're just looking at volume, and you're not bringing in all the other things that I brought in here. And if you have a process where you go through and you look at first maybe where it's trading in relation to moving averages, what moving averages are actually crossing over. We're seeing a lot of crosses here on the 200 here. And then you bring in volume. If you do this in a very structured manner, and I probably should do another video on this because even here in this video, I'm kind of all over the map. It's because the way I used to do that a lot, but I got to the point where I don't have to do it because I I've adopted the experience of trading. That's why it's hard for me to, if I'm completely upfront here, what I probably should do is I should, if there's one thing, instead of me redoing this video, I should say, and I'm going to keep this in the video, is that don't narrate it the way I have necessarily. Create more of a process if you're just getting started. So if you're just getting started, create more of a process and follow that process. And maybe I would be a better trader now, even better than I am right now, if I actually did follow my process a little bit more. But my equity curve on all markets is going up. My trades are, I do a daily trade journal. I actually do a report card. So I grade myself depending on how well I did. It's another thing I would suggest in addition to narrating you should do. So I grade myself. And I'm pretty harsh on my trades. And even if I make money, if it wasn't a good trade, I don't feel good about that. I got there by following a very defined process more than I do now, because I'm trading many different things and I'm trading in a very different style than where I started. If I were to start over now, I would be following my process to a T until I proved that I can operate at a different level. That's what I'm trying to say. So that's what I'm saying. And that's, so it's not, it's one of those things of, not don't do as I say, but more of, if I were to start over without the knowledge that I have now and the experience, then I would be doing it the way that I'm explaining. But I trade a little bit differently. But I see all this stuff. Like I see this structure without even drawing these lines. I see this structure. A lot of times I can see value channel areas, value channel lines. And I see support and resistance and everything else. And I see liquidity areas and all these other things that play a big role. And this is going to get bigger in crypto here as it moves to fiat pairs and as it moves towards more shorts and more leveraged trades. As the market changes, the liquidity plays and where liquidity at and all these other things are going to play a bigger role. But I'm getting way off topic. Here's how to move forward. Take much of what I've said here in narrating the market and really focus on narrating the market to get a good understanding of where you're at in the market. It will give you a good history of where it's at in the market, and it will embed it in your mind in a much stronger fashion. So that's what I would suggest you do. Down below, you'll see links to the Discord group. Definitely join me in Discord. You also see links to other tools that I use. Any thoughts, any ideas, any questions, definitely leave a comment down below. I look forward to seeing you in the next video.